Right, we're now going to have, to conclude the morning session, what's described here as a fireside chat. There is, in fact, obviously no fireside, health and safety and all that sort of stuff, but to oversee matters and to deal with the question of finding your edge. It's my great pleasure to introduce Scott Church, partner at Rede Partners.
Thanks very much, Tim. Good morning, ladies and gentlemen, and welcome to our fireside chat. You may ask, where is the fire? It's actually in the bellies of these two exceptional GPs I have with me today. And I'm really so pleased that I was able to persuade them. Let me introduce Bjarne Lie, Managing Partner of Verdane Capital, and Lindsey McMurray, Managing Partner of Pollen Street Capital. And it's particularly noteworthy that they were able to, or willing to share their insights and learnings really on the subject of our fireside chat, which we've dubbed Finding Your Edge. And really, I think that's kind of gets to the nub of it all. We've heard a lot this morning already from Matt and Dana and Shani and Julian about the tremendous growth of the industry, the holy grail really of finding exceptional returns, and what that means for GPs is the challenge of staying, that bit more competitive and finding something that will allow them to outperform. So if we define edge for a minute, I'd like to suggest that it's the sustainable competitive advantage. It's the reason you win repeatedly, and it's the reason that ultimately you outperform more consistently. So I want to ask Bjarne and Lindsey to comment on some various aspects of finding your edge. Is it acquired through vision and insights? Is it acquired through experience, maybe trial and error, maybe solving for circumstances, or just serendipity? So let's start out this way. If you don't mind, I'm going to ask each of Lindsey and Bjarne in turn to give your elevator pitch, just in terms of setting the context of 1 minute on what your firm does and what you've set out to do in terms of strategy. Start with you, Lindsey.
So, morning everyone, I'm Lindsey McMurray, Pollen Street Capital. We're focused on European financial and business services, and within that we have a growth-oriented strategy, which is supported by an active management approach and a collaborative approach. So what do I mean by those? Many of the growth strategies are kind of minority strategies, which seems a bit counterintuitive to us because we feel like at the point of growth, it's where you need the active management, you need the rigor, you need the drive, and the ability to kind of build out the revenue and profit growth that we're looking for. And we do that in collaboration as specialists in our sector. We do it with our operators in collaboration. We also bring together what is the very highly analytical components of financial services, but together with the human aspects of what it takes to grow businesses at different stages of their development.
Thanks, Lindsey. Bjarne.
Great. So Verdane, we are the largest, and I'd like to think the preferred, I'll get back to that, investor in Nordic technology-enabled growth, increasingly in Northern Europe. We deploy, and a little bit differently maybe, we have the most flexible mandate in the market. So we invest in either portfolios of companies, it's where we grew up in the sort of portfolio transaction model. Some still insist calling that secondary directs, which I think is a misnomer. But also direct investments, minority or majority in ambitious technology-enabled growth. And we are roughly 40 people, offices across the Nordics in Oslo, Stockholm, Helsinki, Copenhagen. We have a small office here, and we're currently building out in Berlin to sort of capture what we feel is a quite interesting opportunity as the only real sort of institutional buyer of secondary portfolio acquisitions, secondary portfolios.
Great. Thank you very much. That was well done, under 1 minute each. Just a housekeeping matter. We do have the ability to take questions from the audience. If you go to www.slido.com, hashtag BVCA, drop down on the menu towards main plenary session or main plenary, you'll see a box in which you can ask questions. And I will check these as I go into asking questions of Bjarne and Lindsey. The only proviso is they have to be better than mine. So All right, let me start with some questions then. And I'm going to ask again Lindsey and Bjarne in turn. I think we have to start, at the risk of this sounding like a commercial, we have to start with understanding how each of them would define or articulate their edge, and maybe also share a bit about how you arrived at it, what were the forces at work. Lindsey, please.
So we are specialists in a fast-changing and complex environment of financial services. And we embrace that change. We see it as opportunity for growth. And then we work together with operators to help them see through the complexity of change, identify their edge, and help them go to market to deliver fast growth. So it's the combination of those aspects of using the change and the complexity, but then providing clarity and vision. And we talk about the balance of vision and execution. It's, in our view, a little bit of vision and a lot of hard work in delivery of that. We started life with our first fund in 2007, and we got live with our first third-party capital just as the market crisis was about to take hold. And we sat back in the beginning of 2008 and said, how do we position ourselves in what looked like it was going to be an enduring low macro environment, and how could we find a way to deploy the capital, not sit and do nothing as a first-time fund in 2007-8, to deploy the capital, deploy it safely, but to deploy it profitably. And so as we looked across the environment, we saw that financial services, and especially in the lower market looking for growth, is where we could see an opportunity where there was a huge amount of structural change that's only continued to grow and accelerate. There was high fragmentation. Outside of the big players, there was high fragmentation, so lots of opportunities, lots of targets. There was actually at that time, less private equity focus on financial services, certainly at the lower mid-market, because there was a bit of feeling it was, it was a place you had to be specialist if you were going to be in it, so there were less people in it. So you had lots of targets, big changing environment, less competitive environment. And so we approached it, instead of the previous financial services approach of just being purely financing approach and balance sheet approach, but from an active management and growth approach. And that is kind of, and it's kind of that enduring building of creating and understanding the formula for growth, not just at operating practices, but also revenue generating practices. Many of our businesses now are going to market to the same end customers, and it's that repeatability of helping them win contracts, and that's the sort of, it then becomes a sort of self-fulfilling knowledge base that you're working with.
Thank you. Bjarne, defining your edge.
That's an impressive story, and I've heard two other impressive ones earlier today as well, so I'll do my best. But I think for us, we've chosen a slightly different angle on it, and we had the luck or the curse to have made a lot of investments after we raised our first fund in 2003, where we started acquiring fairly broadly portfolios, and then gradually setting up sector teams and specializing already back in 2006 around, inspired by our friends at Advent at the time. Started to define really and hone what we thought we were good at, and what we felt matched our culture and backgrounds and personalities, and how we thought we could create sustainable outperformance, which is ultimately what we're all trying to do. And the way we've done it at Verdane is a little bit differently, rightly or wrongly, where we have sat back and said, well, fundamentally, what do we think the route, sort of the most defensible position for sustained outperformance is for us? And the way we've done it is we've defined a statement. It's 23 words, so it's less than 35, but it's again not a complete strategy. I just counted it. Where our goal really is to be the preferred buyer of, investor in, and partner to technology-enabled growth companies. And we sort of set up our business around that overall ambition, because we believe that the closer we get to that goal, the more you enter that sort of golden cycle, virtuous cycle, for all the various stakeholders, that over time will lead to sustained outperformance. And so we sort of have that as a compass for what we do, and we can talk more about why we think that is a source of outperformance if you get there later. But there's sort of three core engine rooms, and we can talk, culture and values is at the heart of it, and we'll talk about that later maybe. But But I think there's sort of three engine rooms we think about when we think about our edge. One is how and what we source. We grew up buying portfolios. That is a non-existing market. It's not intermediated. We've done 35 of them now. Only 2 had a sell-side advisor appointed at all, which means that it means senior people go out drinking roughly 1,634 cups of coffee last year to feed our sort of cumulative knowledge base and build the relationships that allow us to succeed. And that, in combination with probably the most flexible mandate in the market, provides an interesting starting point. The second part of it is the second engine room, if you will, is how we build our companies, how we work as active partners to our companies. We do that in a slightly different way to the other speakers, and again, I'm not sure we'll have time to do it, but it's based on a foundation of operational expertise inside our team. The third engine room, perhaps surprisingly to some, and for those who work in business services, I think they deserve a lot more credit and will become a lot more critical to our industry going forward. In my view and our view of the world, and it's increasingly becoming common wisdom, I think, has always been that you sort of have to have an edge in one of two ways. Either you are sort of a small fund, 100, maybe 200 million pounds, I guess it would be here, max, where you really compete on your local relationships and individual knowledge. And that's how you compete, and that's your edge is around that. Or you are slightly larger and you have the tools, you have the resources to invest in both the people and the tools and the processes that allow you to do better at the rest of the value chain. And there's a lot of people sort of caught in a little bit of that middle now, which I think will be in a bit of trouble. So we made the decision to grow as well, like Living Bridge did. For us, it means really creating the toolkit around making everyone, as generalists, more sector-specific generalists, more efficient. And that has a huge technology component in it. But it's also investing in our ecosystem, mobilizing everyone around us. So we have, for example, just hired a full-time event person, ecosystem person to build from. We had our first quarterly e-commerce lunch back in 2006, and really build from that ecosystem generation that gives us the artificial scale, where we cannot afford to put a huge operational team on our payroll, quite honestly, with our ticket sizes, but building that synthetic mass around us, whether it be our annual SaaStr events in San Francisco or other ways to really mobilize that ecosystem. Great. So those 3 building blocks, I would say, together constitute the edge.
Excellent. As you can see, multifaceted approaches to achieving edge and maintaining it. Lindsey, let me ask you, how you went about then, having built it, and has it had to be adapted and refined, and perhaps what have you done to pursue a sustainability as your firm scales?
So I think, as you build, we've been 10 years in this sector as specialists in the sector, and we've had numerous successes in that field. That starts to build on itself, and it becomes a self-reinforcing component to what you're doing. So the 10 years of knowledge across our group has deepened. It means we have more refined knowledge of each of the subsectors within which we work, and that then we can share with our operating companies. So we have a reputation of working with the operating companies, bringing to them best practice in IT and data, best practice in digital marketing, best practice in go-to-market, best practice in winning large RFPs. And we share that, and we share it across our group, and we also share it across the portfolio, and that becomes a self-reinforcing strategy. We also then start to see, for ourselves, emerging themes that are coming through the industry as they engage in their business. And now we start to get people that will call us and say, will you be a partner in our business? So we get, in this world where it's very competitive, we still get reverse inquiry. 3 of the businesses in our portfolio were indeed reverse inquiry. But we can diligence intensely, we can diligence quickly, because we know the sector, we know the pain points, we know what we're going to try to find out. That means that it's efficient in our model. But the sparring partner approach then becomes, engaging for the operators. They like it when we're doing diligence. They hopefully get something out of it when we're doing diligence. And so again, it becomes a continual reinforcement. And we've built also a network across the business with specific knowledges, not generalists that know financial services, but real to very, very granular detail, specific specialisms that we can give people access to. So it becomes self-reinforcing for the portfolio companies. It becomes self-reinforcing for us because we start to see where the next opportunity is through our engagement. And we've actually, in the last year, formalized the engagement across our portfolio companies. And instead of having the traffic coming through us, which was working but inefficient, we've engaged them together. We've created a formalized hub. We have internalized the cost and the resource within Pollen Street of running that and making it something tangible so that the portfolio companies can actually, where they're going to market to the same types of parts of the market, they can go together, they can learn together. It's less lonely for the CEOs and the business developments. So we've actually now gone to a place of formalizing it in a tangible hub so that where the portfolio companies come to us, they can see the benefit of working with us as an investor. And in fact, we're actually getting companies outside of Pollen Street asking if they can be part of our hub. So we'll see where that goes. But that then becomes a sort of self-reinforcing environment.
Great, thanks, Lindsey. I want to get to team building, acquiring skill sets and really culture setting. I think that's an interesting aspect. And Bjarne, let me ask you, how has your edge informed those activities in your firm?
I think they're absolutely key. One of our largest LPs sort of shared with me once how they viewed an GP. And I said, well, you have to have the right strategy, executed by the right people, working together in the right way. And that's with the right tools and processes, I think it was phrased as. And I think it's intellectually rigorous, it's clean, and it's correct in many ways. But I'm a firm believer in the sort of old saying that culture eats strategy for breakfast. So I obsess about culture, and particularly as we grow, and I obsess about culture for a few different reasons. One is that in our industry, and certainly in a smaller sector, once you become a sector specialist, your brand is built through sort of thousands of annual interactions. And you cannot, it's not really built by expensive advertising campaigns in Real Deals or PEIs, right? So you have to, the values have to guide behavior. There has to be a certain predictability of behavior. And also I think sort of our industry needs to get even better at stepping away from the command and control where all decisions sort of float to the top. I firmly believe decisions need to be taken as close to the complex problem as possible. And to do that, you need a compass. So we have this sort of cultural bedrock, and again, it comes back to, we think that if we live these values, we are more likely to become preferred, which again will generate outperformance. So our core value set is we dare to be different, we get things done, we respect people and the planet, and sort of very clear and succinct actionability around all of these that we then use to set up a certain set of behaviors. So, for example, an associate with us or a chairman gets asked, rank me anonymously on a scale of 1 to 10 whether I talk clearly and to the point using no more words than necessary. And in an industry like ours, which is fundamentally, I think one of the fundamentally largest dangers of our industry is that you live in a feedback-free world. Other than when you meet LPs, everyone you meet are essentially at some level selling to you. And that's extremely dangerous for your personality. And I've created this, what I call, you've heard this before probably, but I created what I call this sort of speak to listening ratio index of the private equity industry. And the longer you tend to have been in the industry, the higher ratio of speaking to listening tends to become. Right? So, and if your goal is to be the preferred partner to these companies, then you need to really think about that, because people don't like being lectured to. People like being listened to. Right? Absolutely. And so that also then guides who we hire and how we hire, which has led us, I think, to have a much more diversified team than many others. We have, for example, of our 9 partners, 7 have sort of C-suite experience. 5 of us have, so I was backed by Apex and Insight partners back in the day. 5 of us have started businesses that have then taken on financial investors. And I think that has also guided a little bit how we think about being preferred. And even when we are in a majority, we tend to, I think, the reason why we invest a lot in technology and ecosystem rather than, and spend most of our efforts trying to build areas where the portfolio companies can learn from each other rather than us sort of parachuting in operational experts. It works in some instances, but we've seen when we have sold companies to or partnered with larger houses that the tension between management and that sort of operational value add that sort of comes in and want to run the business for them is a tricky one. And it's hard to balance that. So we've chosen a different model where we want to empower our people with the right technology, databases, tools, everything from sort of HR pings into the organization, using technology quite cleverly, but also having that ecosystem resource that's on tap to bring in when the companies need it.
Excellent. Tim, do we have time for a question or two from the audience? Because we've had a couple come in, and one of them is somewhat consistent with one I was going to ask you next, Lindsey. The edge in terms of its ramifications on platform growth, and maybe how you think about growing your platform, whether it's through larger funds or platform extensions. And indeed, we got a question from somebody, lots of firms have raised bigger funds in recent years. Are you both going to be raising much larger funds next time around? Will this bring different challenges? So can I start with you, Lindsey?
Well, hopefully we'll be raising a bigger fund next time round. But I think there's also an efficiency that comes. I think there's, we can always, we can do more, and we are constantly seeing and getting access to very good businesses. So for us, it's about getting more efficiency, which we do as we kind of enable the grow, get the playbook to work on a repeatable basis. Our knowledge of data, our knowledge of IT, it deepens, we become much more efficient in our deployment of that. We have already a roadmap as we buy any business as to what we are going to be doing. Firstly, in the infrastructure and the governance, we operate in a highly regulated environment, so we make sure the infrastructure and governance is right as the kind of table stakes for operation. Then we kind of build on the IT, the infrastructure, and the go-to-market. So there's a very kind of prescriptive formula that goes to do that. We get more efficient. We can do things in, but we're not looking to kind of move away from our scale and our growth strategy at the fundamental level. What we have done is added on a credit strategy because the knowledge that we have, and again, the insight we have to the industry, we have, and we've executed that through 2 public vehicles on the credit side, but that's kind of using our specialism and deploying it in a highly complementary way, and that can then feed into the private credit space as that develops also. So we've been able to stay true to our core. We have a strategy in private equity aiming for 3x, and that's what we've been delivering. So there's a certain kind of, that's the integrity that we're looking to deliver, and then we've got complementary strategies that use the capability in a wider scale. We've also institutionalized the business so that we now have 20 investment professionals and 50 people supporting that. So you have to, as the others have said, you have to build out the organization to support the growth and to enable you to do it safely and repeatedly, but it is possible to do.
Great, thank you. Bjarne is in the middle of raising a fund, so I'm not going to let him answer that question. But maybe quickly, Bjarne, do you see this edge as being one that sustains a succession, a multi-generational sort of approach to edge, or will it adapt with new leadership?
So I think if it doesn't survive a generation shift, it's not really an edge. It's just a clever person or some clever people, but you haven't really built a firm.
Yeah.
And that's, again, one of the decisions we made when we decided to try and grow it, was to really build a firm for the long term. And I think definitely yes. And it comes down to, at the core, these culture things we're talking about, but also the tools, processes, and perhaps most importantly, data. So I made a realization a few years ago that our industry is pathetically old-fashioned. I work in exactly the same way. Well, I used to. It's getting slightly better now with IC in the cloud and everything. But email, PowerPoint, Excel, supported by some sort of CRM was how I did business when I started this industry 16 years ago. And it's still largely the same across the industry. And I think that sustainable, lasting edge also comes to how you capture data and how you build and institutionalize. I don't think our industry will necessarily benefit much from AI at the firm level, but really build that knowledge database out to make sure that the sum of the parts is much more than sort of 1 + 1 + 1. And I think we're making huge investment in that area now, building out our capabilities.
Fantastic. Well, I think it's time for a tea break, right, Tim? So I want to thank again my guests, Lindsey and Bjarne, for giving us their insights on this important subject. Thank you.